Hi everybody, this is AJ from G&S Accountancy, and I am here to give you an update on the Main Street Lending Program. If you have any questions, you can email me at aj@gns-cpas.com. I've been asked a lot of questions about the Main Street Lending Program from our clients, and I hope to address those questions and concerns in this short and brief presentation. I will provide a brief description of the Main Street Lending Program and how and when to start applying. My two main sources of information are the Federal Reserve website and the U.S. Chamber of Commerce. So what is the Main Street Lending Program? The facility is intended to provide liquidity to companies that had sound financial conditions before the coronavirus pandemic and will use the funds to maintain operations and payroll. There are two types of loans that our clients will be eligible for. The Main Street New Loan Facility. This can be secured or unsecured against the company's assets. This loan may not be contractually subordinated in terms of priority. Then there's the Main Street Priority Loan Facility. The loan must be senior to or equal in priority to borrowers' other loans. So if there are claims on the company's assets, then these two loans, depending on which one the company applies for, will have different levels of priority. It's the ordering of claims. So for example, if the company goes bankrupt, the senior debt will have greater priority than the more subordinate debt. The terms of the loan. The business must be established before March 13, 2020. The loan term will be 4 years. The minimum loan amount will be $500,000. The loan repayments will be deferred for 1 year, so no loan payments for 1 year. The interest rate approximately will be 5%. The loan is not forgivable like it is with the SBA's Paycheck Protection Program. So what will you need to apply for this loan? Lenders will be looking at the 2019 financials. An important metric that they'll be looking at within those financials will be EBITDA, which is the earnings before interest, tax, depreciation, and amortization. The Main Street New Loan Facility, which is the less secure of the two loans, when combined with the existing debt, the loan cannot exceed 4 times EBITDA. So your existing debt plus the facility that you obtain through this new program cannot exceed 4 times the earnings before interest, tax, depreciation, and amortization. The Main Street Priority Loan Facility, this is the more secure out of the two loans. When combined with the existing debt, the new loan cannot exceed 6 times EBITDA. So, as you would expect, with the more secure loan, you would have the capability of getting a larger loan amount from the Main Street Lending Facility. So what are the restrictions on this loan? Borrowers cannot repay other debt before the Main Street Lending Facility is paid off, except those regular payments that are due on the debt. So the regular loan payments, they will be fine. Borrowers cannot use the Main Street loan to pay down existing debt, such as refinancing other debt with this loan. Borrowers must certify that in the next 90 days the borrower can pay its financial obligations and won't file bankruptcy. Borrowers must commit to stock repurchase and distribution restrictions outlined in the CARES Act. This applies to mid-sized and large businesses, so distributions to the owners will be restricted. Borrowers should make commercially reasonable efforts to retain employees. Thomas Barkin, the president of the Federal Reserve of Richmond, he mentioned in a Wall Street Journal article last week that the program should be rolling out in the next 2 weeks. Eligible lenders are U.S. federally insured depository institutions, including banks, savings associations, and credit unions, as well as any U.S. branch or affiliate of a foreign bank. Non-bank lenders may be considered in the future. Businesses with net income of at least $125,000 may be able to apply for this loan. We recommend CPA compiled or reviewed financials, as this will make the process a lot simpler for the lenders. I want to thank you for listening to me today. If you have any questions, please email me. I look forward to hearing from you.